Investing is a video game, and if you understand how to play, you can level up fast and get millions of dollars. Just like one of my colleagues who got 20% returns and $6 million in the last 12 months. You see, investing has secret cheat codes that can guarantee you'll be rich, and I even use these cheat codes myself to multiply my money. I learned this by working with big investment funds like Amiral or Sycomore, managing billions of dollars. But unfortunately, 99% of small investors don't know them. So it's no wonder that when you invest in a stock, it doesn't ever get a positive return. And I'll be honest, it's not because your idea is bad. It's because the top investors know the shortcuts to being successful. And just like a video game, once you learn how to play, you can advance through the levels much faster. In this video, I'm giving everything away for free so that your next investment can look like this. Over the next 10 minutes, I want you to pay close attention to how I talk about stocks. You'll notice something weird. There is a famous investor called Peter Lynch. One of the investing secrets that he uses to make big gains is to consider stocks like actual businesses and not lottery tickets. He uses it to better understand the key metrics of an investment. And we can also use this for our own strategy. And I know it works because when I tried it, these were the results. Seeing a stock like a real company is a very powerful tool because if you think like a business owner, you are more rational and less influenced by short-term fluctuation in the stock market. Instead, if you can focus on what really matters and if you can understand the three key metrics of a business, you can understand better what can move a stock. At 19, Warren Buffett changed his investment strategy from a technical analysis to a business analysis. He tested both styles to see if he would get more returns, and that resulted in a higher performance. So next time you want to make an investment, identify the three key metrics of a business. Then you might get more results. But to be completely honest, successful investing isn't always a research problem. You see, I'm going to be really real with you. Most beginners do the one thing that kills their returns, and it's almost always the reason why they're waking up with no gains. So until they understand this, they are going to think that the market is against them. Investing works in a ranking system where there are thousands of companies constantly in competition with each other, all trying to get your attention and make you emotional. It's your job as an investor to be clear about your game plan, but this is where 99% of people mess up. Imagine you had invested in Google in 2019. When the pandemic hit, the stock fell and you thought, oh, I made a mistake here, let's sell before it gets worse. If you had bad results in the short term, it must have been a bad idea. But it wasn't. During the recovery, Google's stock price skyrocketed and was one of the best performers. The stock market will test your conviction and make you lose patience. Here's my game plan for you. Take out a notepad right now and write down all the companies you'd like to invest in. Then, write why you should hold the stock for the long term, say 5 years. Now, make an analysis of the company and write what you think the business is worth. There are some simple valuation tools like a discounted cash flow or a price-earnings ratio that will give you an estimation of a target price. If the current price of the company is too high, just wait. But if the stock falls for some reason, go back to this list. If your rationale is still valid and if the stock is trading at or below your target price, this is the time to buy. Keep doing this for 1 to 3 years and let me know your results. I've been doing this for the past 6 years and I've had a good performance so far. But if you want to take it one step further, I have to tell you about one of the best investing advice I ever heard. And it all has to do with the show Friends. When you and millions of other people sit down in front of your TV to watch the show Friends, you know exactly what you're going to get. You'll get some laughs, drama, and a look into some close friendships. The format is pretty simple, it doesn't change, and it works. The next time you want to relax and have some laughs, you'll remember that feeling that Friends gave you. Now, let's say you sit down to watch the new episode, but something isn't quite right. Monica is out in the jungle alone, building a survival shelter with only a spoon. The show producers decided to model this episode that got 78 million views. I mean, it must do good, look at these views. But unfortunately, it wasn't what the audience was expecting. They wanted Friends, not how to build the most modern, underground swimming pools in an underground house. This special episode is like investing. You don't get any extra points for the fact that something is very hard to do. You don't need to be a genius. Just focus on simple businesses that you understand and don't try to be extra smart. It seems obvious, but I see so many small investors make this mistake. They try to invest in very complex businesses and they lose it all. I recently went to the Berkshire Hathaway annual meeting and saw Charlie Munger, who gave an amazing speech. And in that speech, he gave one main takeaway that will help you as an investor. He talked about diversification. Most business schools teach that you have to diversify when investing in stocks. Munger thinks that this concept is insane and calls it diversification. He made a fortune investing with a concentrated portfolio and focused on his best ideas. He did this because there is less risk owning 3 easy to identify wonderful businesses than there is owning 50 stocks. So next time you think of diversifying, ask yourself, is this new investment better than what I currently own? If not, add to your best idea. This year, in Buffett's letter to shareholders, he said, "In 58 years, most of my capital allocation decisions have been no better than so-so, and our satisfactory results have been the product of about 1,000 truly good decisions," which he's saying is about once every 5 years. There's about 300 important decisions, and he's saying that 12 move the needle. We have 4% from the gods of investing, which doesn't give us a lot of confidence. To improve your chance of success, focus on your best ideas. And the more concentrated your portfolio is, the easier it is to understand what you own. But let's be honest, most of us are just trying to get rich. Speaking of Buffett, the best results of his career were achieved in his earlier days, when his approach was way different than it is now. He achieved 29% annually for 13 years, investing in small, undervalued companies that nobody liked because there was a scandal or a temporary issue. He calculated the risks and rewards of these situations, and when he won big. So if you want good results, you can look for companies that are disliked at the moment. You have to be curious and look for opportunities. And you are currently doing this. I mean, this video has a lot of good information that not a lot of people will share for free. And because of that fact, you've hopefully learned something that will make you more money. You're taking precious time out of your day to educate yourself about investing, which is way more productive than 99% of people do. Most people are just sitting and scrolling on TikTok, so that should be uploaded. And I think it goes to show how investing works. Some people are getting better every day and others are just complacent. And that makes a difference. That's how you can see opportunities when others don't. And if you do that, you will be rich. Also, I'm going to mention that I have plenty of videos that will make you a better investor. You can watch that here. Thank you all, have a great day and subscribe.